Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, multi-asset funds have always intrigued investors looking for a diversified approach, and more so in a volatile market environment. So, is now truly the best time to invest in these funds? Let's discuss this with Dhirendra Kumar. Welcome, Dhirendra. So, Dhirendra, what exactly are multi-asset funds and how do they compare with single asset funds in terms of risk and returns when it comes to such market environment?
Multi-asset funds are, it's self-explanatory, investing in multiple assets. And multiple assets, just not equity and debt, but also InvITs, REITs, and, gold and silver. So it provides you a convenient vehicle whereby, with your single investment, you are able to spread your money, just not in equity, debt, but all other financial instruments or, asset classes available for investors to be, able to invest through the market.
Okay, and how do they compare with single asset funds in terms of risk and returns?
The key risk of multi-asset fund remains that it will be substantially, these funds are dominantly, equity fund, 50 to 65% into equity. So madness of the equity market will be extended to multi-asset fund as well. Just don't think that, because it's a multi-asset fund, you are insulated or divorced from the crazy wild movements of equity market. That is not going to be. If equity market falls by 20-30%, which is not unusual, every 4 or 5 years, market falls by more than 10% at least once. And in that case, this fund will also fall by 5%. And in a month's time. So be ready with that. Every investor should diversify beyond one asset class, because if it's all equity, it will be very turbulent and people are not prepared for it. People are prepared for it, or they're very happy with it when it's only going up. But the design of the whole thing is that it goes up very steadily and falls very dramatically. And that scares people. And that is why you need to really balance it with stability. And for that, at the least, you need fixed income. Every investor needs to add something beyond equity, even if you are a very long-term investor, for two reasons. One is that it will provide stability to your investment. The other is that, when you are presented with an opportunity that the market has tanked, you should have money to benefit from it. And that is when most people don't have. That is why you should have fixed income. Whether it is 20%, whether it is 35%, whether it is 50%, it's a matter of, you have to take a call. But why everybody should diversify? Then comes what else? Gold and silver is becoming an interesting, at least gold is becoming an interesting investment avenue of late, or for past couple of years, it has made a very interesting case for itself. Second is that, REITs and an evolving segment, and it has its own character. And having its own character, which is which is not related to equity and debt, is a very meaningful diversification, because it is REITs and InvITs are, I would say, they are hybrid by design. They are supposed to give you capital appreciation besides income. So because of the underlying character, it gives you a very diverse range of investment avenue combined into a single product.
Okay, interestingly, you said gold is becoming an interesting asset class, but for long you've maintained that gold is an unproductive asset. So for someone who plans to hold this portfolio for long term, do you think investing in gold and silver makes sense, and why the change in stance?
Gold is an unproductive asset, because when the character of gold ownership is that when you buy equity, you are giving money to somebody to run a business or to build a business or whatever. Indirectly, you are giving it to an equity fund, which in turn, is given to a fund manager, who in turn gives it to somebody. Debt is lending money to somebody who is putting it in some business and, giving you interest. Gold still sits somewhere, whether in your locker or whether in a bank's locker. So it remains unproductive, but, gold has added a new dimension. Central banks are buying gold as a hedge in such large quantity that is a new stream of ownership which has become visible all over the world. Second is that, every central bank has gone about printing money to such an extent that the worth of the fiat currency, the currency that we hold, is going down. So, gold is emerging as something which is a superior store of value. And that is a new demand, because of which, my views don't change that, gold has not become productive. Gold has added a new dimension to it that central banks are buying, and that is why it has been able to guard its price. It has appreciated and it looks promising.
Okay, so does that mean that multi-asset funds are now, they're a good option for someone looking to hedge against inflation and currency fluctuations?
It will be an interesting option because, in a single vehicle, you are able to combine it. And the treatment of the whole thing, it's a very tax efficient vehicle. It is very convenient. It is combining all these useful things. But, still, I would say that for any naive investor, for any first time investor, it could be a very interesting vehicle because it will not scare you. An all equity fund is very scary for any new investor. And more so when, most investors are attracted to the market only after it has done well. So in that case, this multi-asset could be a very interesting option. It will be very useful for those people. Instant diversification, tax efficiency and all that.
So what parameters should investors consider when selecting a multi-asset fund?
If I have to choose a multi-asset fund, I will first go for what is the allocation principle that the fund will follow. If it is spelled out very clearly that at all times one will be invested 50% into equity, 15 to 20% into arbitrage opportunities. If it is a frozen allocation and a pre-stated one, I will like that fund. If a fund is able to deliver me these allocations in a disciplined way and he is just plainly and simply doing the rebalancing, I'll be very happy because I will be a winner with that simple a strategy. Because the problem of taking a big call on whether to be tilted with equity or to be tilted with fixed income and the likelihood of going wrong, and what we keep saying that you can't time the market, that is as much true for fund managers as well. This is where I think that I'll go with something which is very clearly spelled out what it will do at all times.
Okay. Now here's a viewer's question. Joseph has sent in a question saying that in view of new tax rules, can we allocate our debt portfolio to multi-asset funds? If so, what are your recommended funds? Some have less than 65% equity, he says. So will they be a better choice?
Yes, in view of the new tax rules, it will be convenient and beneficial for investors to be investing in multi-asset fund, because your debt component, your gold component, or your real estate investment trust, or InvITs, or silver, that could be 1/3, but it will be treated as equity, which is beneficial, which is more convenient. So you should consider that. Some have less than 65%, not true. Many funds have less than 65%, but they are going to keep it 65% because there is an arbitrage allocation, and that could be 15 to 20%. So that gives it the classification or the character of, from tax-wise, it will be treated as an equity fund, because tax laws still provide for a mechanism whereby a fund must have arbitrage plus equity should aggregate to 65% and more to be treated as equity fund, and so that there it qualifies. And which are the best funds I will recommend? I will not recommend here.
Okay. All right then, that's all we have for you in today's episode. Keep watching the space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.